Folks, recently the stock market has been in complete free fall with the Russell going into bear market as of just a couple weeks ago. But now we have something going on. The market is starting to flip. Stocks are starting to go up. People are like, wait a minute. Is this just some kind of fake out? Or are we destined to go up now? Or is this just a fake out and we're going to go right back down? And so I wanted to do a whole video breaking down exactly what I see going on in the market now. What's the next steps in this market and kind of how people are really off sides in this market completely. And so I'm going to break all that down. Should be an info-filled video here. Hope you guys enjoy it as always. So yeah, as of just a couple of weeks ago, people were flooding out of the stock market in mass, right? January 27th, this was published. So just, that's what, 12 days ago or so. You know, the market was into bear market. Yes, bear market territory. Unbelievable. I mean, it was falling off a cliff, and it happened so fast because we hit the November, it was highs in November essentially, right? If we go ahead and look at this, right? I mean, November 4th, we were at 2,400 plus on the Russell. Things were going well, and then it just fell off a cliff. And next thing you know, we were in the 1,900 territory in late January. And it's like, how did that happen? Like, how did that happen? We just fell off a cliff, like literally. And next thing you know, we're in a bear market, right? How did we end up in a bear market? There's 4 core reasons, in my opinion, how we ended up in a bear market for the Russell. One was tax loss harvesting. That really got us in the back half of November and into December, essentially. There was a lot of retail investors specifically that bought stocks in January, February of 2021 and likely lost a ton of money. And so there was just a lot of tax loss harvesting going out there. Funds as well did this as well. So that was definitely one factor. Second factor was the Fed and the fear around the Fed. What's the Fed going to do? How many times are they going to raise rates? All those sorts of things, right? Big subject recently. Then number 3 was earnings fears. Everybody's very, very scared about earnings. Oh, what's going to happen? Are these companies going to report bad earnings? Are they going to report that revenue is going to be down in 22 or EPS will be down in 22? All those sorts of things. And then lastly, you add on recession fears on top of that, and you got for an ugly situation, right? And so all of a sudden you go into this market and it's fear. Be scared. And that's how you get the market to go to a bear market in a matter of a couple months, essentially, when you add up all those factors on top of each other, right? And what we've seen, right? Tax loss harvesting, that was a short-term thing. That ended. The Fed, that's going to continue to be the thing, but now everybody's expecting like the Fed to raise rates like 1 million times this year. So now all of a sudden the worst is pretty much priced in there. Earnings fears are leaving now because, we're hearing company after company say, basically they're going to have revenue and EPS expected to be up this year. And obviously with the back half of the year being much stronger. So all of a sudden the earnings fears are going away now that we've actually heard these earnings. And recession fears there's always going to be recession fears in the market. But here's the thing, right? If companies are saying they're going to grow revenues and they're going to grow EPS, there's not going to be a recession in that sort of scenario, right? So you get in this cycle essentially where it's like, okay, oh man, what do we have to go off of here, right? And this is why the market bottomed out and why we are starting to uptrend now, essentially. The NASDAQ basically reached its highs a little later than the Russell. The NASDAQ reached its highs on November 18th. It was 16,000 plus. And next thing you know, it was trading under, 13,000 and some change, and basically lost almost 3,000 points in a snap of fingers, right? And here we are today at 14.4 for the NASDAQ. And, it's come back pretty decently strong. Today's a very good day. A lot of green out there. There's so much green in the market here today that we lost our photos for a Hungry Bowl. Like, we don't even have thumbnail images because it's that much green. The app just doesn't even know how to process that much green going on out there here today. Also, Bitcoin has bottomed. Ethereum bottomed. And that's really, really important for the psychology of the market. Bitcoin was at 33,000 recently. And so that was just another one of those factors of people being really, really scared out there and looking at this and like, what the heck is going on, right? Now, we're going to see some trends opening up here, right? If I go to my watch list, what do I see in common? I see, if I go sort the list by basically the best performing stocks of the day, almost everything is mid caps and small caps. Fubo, mid-small. Teladoc, TDoc, mid-small. Revolve, mid-small. Lemonade, mid-small. Celsius, mid-small. Tattooed Chef, a small cap. SDC, small cap. Everything that is performing amazing today, 5, 6, 7, 8, 9% movers for the most part outside of Square on my watch list are all mid caps or small caps. Because we're in that sort of market where we're starting to get this turn, and the things that come back the fastest are these sorts of stocks. Remember, Tattooed Chef, not that dang long ago, was $10 a share. It was $10 a share just a couple weeks ago, right? When we were in that massive late January, basically crash in the Russell. And so you're looking at a lot of these stocks. STC fell to $1 something a share, right? And a lot of these stocks are now significantly off of where they were at their lows, and they've turned a corner essentially in this market that are to the upside. Now, Corsair is just trolling us here today. We saw nothing but all the mega caps and whatnot moving like 20% on their earnings, and here we are with Corsair moving 1% after its earnings. Can't make this up. You got to have a sense of humor in the market. That's the thing I told the private group today. I'm like, if you don't have a sense of humor for the stock market, man, this market can make you go crazy. That's all I got to say about that. You got to have a little sense of humor in the sort of market, right? Now, if we think about who's really been bullish, who's really been out there buying the dip, so myself and Tom Lee, I think that's about it as far as the bulls out there. I've watched a good amount of CNBC the last couple months. I can't find anybody that's bullish that goes on there and it's like, you got to really be loading up on stocks here. Tom Lee, he made this statement very recently that it'd be a violent rally in the month of February. We'll see if that plays out, obviously. So far, it's looking pretty good. We'll see how it plays out for the remainder of the month of February, right? But that's a big statement to say there's going to be a violent rally. It's a big, big statement. So, but so far, I got to say, it's looking pretty darn good. And you can't really find people very bullish in this market right now. I don't know anybody close to me, like friends in the market or anything that are out there, buying the dip heavy. Most folks I know around me have either sold out of stocks over the past month or two, or are in a situation where they actually shorten the market. And there was a great game this season, okay? And essentially in this Raider game, it goes into OT, and you get the defense was all playing up really close to the box. Essentially, everybody was within a couple yards, and this is like the market right now. Everybody's playing defense in this market right now, where they've sold out of stocks, gone all cash. They're short in the market. They're buying puts, and this has happened over the past month or so. And everybody's ready on defense. They're like, okay, here we go. We're getting ready for the run, right? And in this game, guess what? They didn't run the ball. They ended up passing the ball. And everybody's caught off guard on defense. And next thing you know, the offense scores a touchdown, game over. And people are like, what? What just happened? This is the short sellers and the people that sold out of the market. They're Lamar Jackson just looking like, what just happened? What just happened here? I thought we were going a lot lower. Wait, what's going on here? How did we just lose this game essentially? And that's what happens. And meanwhile, the buy the dippers, things are starting to trend our way. Let's just put it that way. Okay. Now, how do you get the market to keep going down? Because I think this is really, really important. Because if the folks that say, oh, the market's going to crash, it's going to get way worse, right? How do you get this market to truly continue to downtrend? Well, you need certain things to happen in order to get this market to downtrend. And get these folks that are all off sides in this market and are all playing defense to end up being right in this scenario, right? You need this. First thing you need is the biggest of the big companies that really dictate where the indexes go to continue to go down. Now, what are some of those companies and where are their valuations at? Well, Meta Platforms would be one of those companies, $600+ billion market cap. It's trading at historic lows. Historic lows, trailing P, forward P, price to sales. I don't care what you're talking about, right? This company is trading at historic lows. In order to get Meta to go down more it's a pretty far-fetched tale. That's all I'm going to say about that. To get this stock to say, oh, it's going to go down to 150 or something and tank the market more, you're hoping for a lot. That's all I'm going to say. You're the definition of this Ravens team right here that was playing all on defense. That's just literally crazy. You're not going to get this baby to go down much more at all, if at all. It's probably already bottomed, to be honest, because the price to sales ratio, the forward Ps, the trailing Ps, all this stuff starts to matter. You can get these short-term time periods where these things don't matter, and people look at it and they're like, you know what? Sell it anyways. But eventually, you catch up with yourself, and price to sales ratios, forward Ps, and trailing Ps, and all these things, they have to matter. And in January into February of last year, these things didn't matter on the upside, right? And you saw stocks trading at crazy forward Ps. You saw stocks trading at crazy price to sales ratios. And the more speculative, the more people wanted it, right? And now we're in this sort of market where people have sold off these stocks in mass at ridiculously low valuations. And at some point, valuations start to matter again. And you can't get these stocks to go down anymore. Amazon's one of the biggest market caps in the world, usually around a $1.5 trillion market cap. Amazon's trading at pretty historic low forward P. It's trading at like a 43 or so. Keep in mind, Amazon's usually a company that beats numbers, so don't be surprised if they end up, by the end of the year, beating whatever analysts expected this company to do in EPS, and maybe they're actually trading at like a 37, 38, 39 forward P right now. That's ridiculously low for Amazon. Like, you should usually expect to pay for Amazon stock anywhere between a 50 and a 60 forward P. If you can get it in the 40s, you are looking really darn good for yourself when it comes to Amazon stock. So because this is a stock that this is a net income machine, cash flow machine over the next decade plus, right? And so when it comes to Amazon, it's just trading really, really darn cheap on any historical norm. You don't usually find Amazon trading in the 40s, especially the low 40s for a forward P. That just doesn't happen, okay? And so this is one of those stocks that's like, okay, could it go down more? Sure, but it doesn't make any dang sense to get this stock to go down any more than it's already gone down, right? You look at Alphabet. Alphabet's trading right in line with where it should be, around a 25 forward P. This is another one of those that don't be surprised if they end up being EPS numbers by the end of the year, because that's what Google McDougal ends up doing. They do it all the time, and so don't be surprised if they end up doing that again. They do it pretty much year in and year out. You look at Tesla Tesla, obviously a huge market cap for Tesla, right? Usually around $1 trillion market cap. Now, while most folks might look at this that don't own Tesla and they're like, oh my gosh, it's trading at a 91 forward P. That's insane, okay? For Tesla usually trades in the hundreds for forward P. So the forward P is actually low for Tesla, right? And everybody that's in the stock, for the most part, they don't even care about forward P for this stock. They care about where this company's profitability is 5 years from now, 10 years from now. And so, forward P of 90, 100, 150, 200, it's really irrelevant to folks because they're like, Tesla just got to profitability within the last couple of years. And they're at the very early innings of the game. It's like, if we go back to the football game, it's like being in the first quarter, right? And folks are looking at this and like, Tesla's in the first quarter of profitability for their company. And so, to even try to say, oh, it's at a 91, that's high. No, not for how early days Tesla is for this company. So to get all the Tesla bulls to say, I'm going to sell out of the stock because it's trading at 91, good luck doing that ultimately, right? Netflix is usually around a couple $100 billion market cap roughly. This one's even trading really cheap. It's trading so cheap that I'm even thinking about buying Netflix, right? Was it for so many other deals in the market, I'd be considering this. Is it a forward P of 36 right now? 36 for Netflix is ridiculously low. And when you think about all the growth levers and net income levers Netflix is going to have over time, Netflix is one of those services, if they go up $2, $3, $4, $5, like people aren't going to be like, I'm canceling my Netflix because that, like anybody that's a core user of Netflix, they're not canceling their memberships over that. And all that stuff is, when you add up the numbers and the amount of users, it's just a $2 increase. For instance, Amazon, somebody in the private group ran numbers recently, right? If you didn't hear, Amazon's raising their Prime prices. And somebody ran numbers on what that's going to mean for Amazon's revenues. And what they found is Amazon revenue will end up increasing just because the Prime, raised there, just off current customer base, of like over $4 billion of extra revenue on an annual basis from that. It's just an insane number. If you think about a company like Netflix that has pricing power plus other expansion opportunities over time, they're in a pretty darn sweet spot. So to get that one to go down more, it's not impossible, but I can tell you it's going to be a big, big challenge to get that baby to go down in any meaningful way, right? Apple, trading a little rich, but honestly, it deserves to. This company just beat revenues by $5 billion. They just beat revenues by $5 billion in that quarter. And you think about the supply chain situation, all that drama, and here this company is just knocking the ball out of the ballpark, hitting home run after home run. They're like Barry Bonds back when he was juicing, man. It's nothing short of extraordinary. I know I use that term too much, okay? Nothing short of extraordinary. Like, I still can't wrap my head around how Apple beat revenue by $5 billion. Like, that's just like insane. Like, $5 billion to beat by is just crazy, okay? So to get Apple to sell off harder, it's going to be a challenge when you come off of that insane of a quarter. If you're bullish on Apple, right? Why are you going to sell out of that stock? Like, They just came after an incredible quarter. They're executing as well as any company in literally the world outside of maybe Tesla, especially for big caps. And so you're looking at that and you're like, am I going to really sell my Apple stock? No, I think I'm okay with that. And then you have people on the sideline that are looking at this stock. They're like, wait a minute, they just beat by $5 billion. Yeah, it wasn't even like there's stimulus money out there or anything like that anymore. People are like, okay, I think Apple's pretty darn good. So to get these big dogs to fall more, I think it's like pulling teeth. That's all I'll say about that. It's like pulling teeth to get these stocks to fall in any meaningful way, right? Then you go ahead and look at this, right? Mids and smalls. Thank you, Yardini, for updating your guys' charts to. They'd been kind of slacking. The last thing they had as of yesterday was a 28th. So now they have the 7th. If you look at where smalls and mids are trading at, they're trading at unsustainably low levels, essentially, for forward PEs. That has to come up to more normal ranges. You can only get these stocks to trade in these low evaluations for so long, and they have to come up, right? Just like on the upside, you can only trade unsustainably high for so long. And so essentially the mids and smalls, they have to come up. And so to get the mids and smalls to come up, to go down even more, it's not impossible, but I can tell you it's pretty darn unrealistic. To get these sorts of stocks to sell off even harder, good luck. That's all I'm going to say. It's like, you're trying to get the last little lemon squeezes out of these stocks. And like, I hope small caps, S&P 600 small caps go to 12. It's like, okay, not impossible, but gosh, that's like trying to flip a coin and land on the right side 5 straight times or something like that. Or get hit by lightning twice. Like, it's possible, but pretty darn unrealistic. And that's the sort of market we're in right now, where everybody's hoping like things even go lower. And it's like, you understand how historically low we are on these ranges, and you start to realize, oh my gosh, like this is a near impossible challenge in the end to get these sorts of stocks to move down in any significant manner. So you have problems getting large caps down, mega caps, that's right, that moved indexes. You're going to have trouble moving those down more. Mids and smalls are in historically insanely low levels, so good luck to get those low. So it's like, okay, mega caps, it's almost impossible to get those lower. Mids and smalls are trading ridiculously low right now. It's going to be really, really hard to get those lower. And so what do you have to go off in this situation, right? And then we think about stocks competition, right? What are stocks competition? Like if somebody has money, like they have places they could put it, right? One is just leaving it in cash. One is putting it in crypto. One is buying real estate with it. 4 is bonds, and 5 is savings and CDs. That's where people think about putting money. And then you can say like 6 is like gold, silver, those sorts of things, right? So let's break this down. Cash, well, what do we know about your cash? It's, as Ray Dalio says, cash is trash, right? Cash is always consistently being devalued because what the Fed does, essentially. And here's the thing. If you get any real weakness in the economy, any scares, any true recessionary fears, guess what ends up happening? The Fed starts up the money printer again, and next thing you know, there's a flood of cash. There's a flood of money out there in the system, and your cash gets devalued even more and even more and even more, right? So what we know is cash is a pretty bad place. You should always keep some cash around, but to keep most of your money in cash, like a lot of people have done recently, that's a dangerous proposition when you're constantly having your money devalued over and over and over and over again, right? Crypto. So crypto is always going to attract a certain amount of individuals, but a lot of folks look at crypto and they're like, that's not the most realistic thing for them. They may put a little money in Bitcoin, a little money in Ethereum, but they're not going after the altcoins, and they're not going to, invest heavy parts of their net worth in crypto because they look at it and they're like, that's kind of a riskier thing, right? And that's something that the Fed's not there really to save the day, right? Real estate has gone, to be quite frank, insane. And there's very low inventories out there. So even a lot of real estate investors are looking at this market right now and they're like, I don't really want to put my money in real estate because it's went through such a boom time. And remember, the last time we really had a major crash in the economy was obviously 2008, 2009 when real estate got hit. So a lot of folks are scared of real estate. They're looking at this market and like, I'm a little scared. I'm a little, I don't know if we're going to have another 08, 09 type thing. So a lot of folks are like, I'm staying away from real estate. It's not nearly as much of a frenzy in real estate like we've seen in the past, right? Now, it could get that way if real estate continues to go up for another year and has another phenomenal year. There's very much a possibility that by the end of this year or into 23, we could end up in a full-on real estate frenzy, and that would definitely scare me. But we're not quite at that stage yet, because a lot of people do get scared and they're like, I don't know, real estate, yeah, it's gone up a lot, but it might go back down. Look what happened to real estate in 08, 09, and prices fell 40, 50% in some markets. Bonds are a joke. I don't even want to address bonds, and savings and CD accounts are a complete joke as well. It's not even worth addressing there. Then you have gold and silver. Gold and silver usually attract a certain demographic, a certain folks that are always in fear and always are going to say negative things about the Fed and certain things like that, right? So when you look at stocks competition, there's not much competition to really, in a meaningful way outside of maybe crypto. And like I said, a lot of folks view crypto as non-investable, or they view it as like they're going to put like 2% of their net worth in crypto or 5% or something like that, right? So basically, stocks are in this position where they don't have much competition, right? And so then you have all these folks that are very offsides in this market, right? The folks that have gone short the market. You have the cash gang, right, that have gone all cash. And those folks have they have three choices now to make at this point in time, now that the market is starting to flip. They can stay short, or they can stay in cash, and they can hope for a major recession, and they can hope that also the Fed raises rates at the same time, right? Now, I can tell you, the Feds, I know a lot of people don't like the Fed, but they're not stupid, okay? And the bottom line is, if the Fed feels any true recession fears, and a situation where unemployment starts to jump, or companies are really start to be hurt or anything like that, the Fed, they're not going to raise rates. If anything, they'll end up dropping rates, and they're going to start up the money printer again, okay? And so that whole hope is, in my opinion, pretty darn unrealistic. So those folks can stay short the market. They can stay in cash, but it's a dangerous thing, right? Second thing is, they can choose to get partly back in this market, right? And slowly start to deploy money, and they start to realize, oh man, some of these stocks are trading pretty darn cheap, right? Meta's pretty darn cheap. Amazon's still at ridiculous lows. PayPal looks like a snack right now. No, it doesn't look like a snack. It looks like the full meal, the full course meal. It looks like pretty darn easy money, right? You can look at mids and smalls where there's just, deals literally everywhere in mids and smalls right now. Like the amount of, off the top of my head, I could probably think about 20 stocks that are good deals that are mid caps and small caps right now, if not more than 20 stocks, just off the top of my head, right? I could write down a list on the whiteboard. It'd be a very long list. So you can have them enter partly back in, or you can have those folks get all back in this market and say, you know what, screw this. Why am I in cash? Why am I short in the market? And let me get back in this baby, because there's a lot of companies to be really darn excited about, and they're trading at really insane valuations on the low side, right? So in my opinion, what's going to likely end up happening, I don't see those folks saying, I got to get all back in the market right now. I think this is going to play out. I think those folks are going to probably continue to stay cash or stay short the market and hope things work out. And that's basically what will happen. I think some folks are going to say, you know what, I think I made a mistake going all cash. I'm going to start going long, and they're going to start going long, especially if this rally continues on. And if you continue to see the Russell move up, the NASDAQ move up, I think some folks will say, you know what, I got to get back in this market a little bit. I'm caught off sides in this, and I made a mistake. And so that's what I think will play out. And obviously that's a good thing for stocks in the end. So hope you guys enjoyed this video. As always, that's my opinions there. Make sure you subscribe to the channel. We got a massive Valentine's Day sale coming up. If you want that deal as soon as it drops, basically check out pinned comment down there, enter your info, and we'll send it over to you. Much love and have a great day.